All right, welcome back everyone to another episode of Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, man?
Man, Wall Street closed lower today again. As you know, semiconductors, we're seeing a lot of sell-off in there. We also have this, tension in the Middle East. But let's go through some of the numbers, man. Tech heavy NASDAQ dropped 1.40% today. I mean, that's a crazy drop. S&P fell by 1%, and the Dow Jones slid to 0.77%. I mean, we're seeing some heavy pressure on especially the tech sector, The only sector, the only part of tech world that we see a little bit of recovery is like, maybe like software. I mean, go look at Microsoft. Microsoft is doing really well, and some of the other softwares are doing kind of little well. So it's like we're seeing some money kind of rotating that way. So I don't know how long it's gonna last. But overall, man, the semiconductors, go look at all the semis. They getting beat. Netflix was down like 7% on disappointing third quarter guidance. I mean, got smacked. Now, not everything was going wrong, right? So if you look at the oil spike. Go look at WTI crude. They jumped from 4.8% to about $82.49 a barrel. Iran and US still fighting, man. That thing is not going anywhere. I thought we over and done with that. We had a promising going on, but boy, oh boy, we that is not slowing down anytime soon. And it's almost a year into the craziness and still no resolution. Gold also, go look at the gold. Gold is back around over 4,000, hovering around 4,020 per ounce as people are scrambling trying to figure out what a safe haven to look into, right? So again, it is, I don't know. It hasn't been promising at all in the stock market this week in terms of like things going up a little bit. But we're not calling gloom and doom, but it's like there's several things that kind of pulling the market down a little bit. On the other side, inflation kind of look cool down. If you look at some of those numbers that came out with the fresh economic data that showed the prices, moderating consumer price index CPI coming in lower than expected. I mean, I think we were expecting like 4 point something, and it came in like 3.8 or something like that. So again, like we're seeing some. I don't know how they're calculating those numbers because them grocery stores are not showing up that inflation is cooling down. But overall, I mean, if you look at it, the inflation, the numbers that came out this week, it looks like it's slowing down a little bit. So Wale, man, let's get your input on this week because it seems like it's just been all over the place, in my opinion, at least.
Yeah, so this week was interesting in a sense that I think CPI and PPI both came in a lot cooler than expected, which
Mm.
did help the market for a brief moment. I think everyone kind of expected it to come down a little bit cooler because we have seen a tremendous drop in oil
Yep.
when we were hearing that there could be a potential resolution to the conflict happening with the Strait of Hormuz. Now, it sounds like all of that has just been scrapped for the
Mhm.
time being, and that there is no resolution or there will not be any resolution in sight. So, with that being said, could we see a future spike in CPI and PPI when we get the July numbers? We don't know yet.
Right.
So that's what we have to now wait on. Another thing that I will also admit is if we look at the 10-year yield for this year, we hit above 4.6% again.
Yep.
I think we have come down from the high, but 4.6% is close to where, let me see. Yeah, I think that might have been the high for the year so far. So the bond market is showing a little bit of, I'd say, tepidness to a certain degree. So that's also something to watch. Um, yeah, and then when I look at the sell-off that we had this week, a lot of the sell-off again is concentrated in a lot of the AI winners that have had the best 2 quarters so far this year.
Mhm.
So a lot of the semis, a lot of the memory names, some of the cloud computing names, like all the sort of AI suppliers who have been clear cut winners so far this year have been beaten up over the last month. Could it just be profit taking?
Mm.
Possibly. And again, since software is one area that has been fairly weak over the last 7, 8 months, we could be seeing a rotation into that sector because we saw like ServiceNow was doing pretty good. Workday was doing pretty good this week. We saw some of the cyber names do pretty good this week. So this is kind of like the third week I've kind of seen this happen pretty
Mhm.
regularly now. So it would not surprise me if things continue because, again, as a fund manager, institutional manager, you're always looking for areas where you can get more bang for your buck and value. And we said this a couple episodes ago. We've been saying this all year. Software, especially cybersecurity specifically, is a place that you can find a lot of value outside of the semi trade. So we're
Yep,
seeing that
yep.
right now.
Yep. And I mean, we've been seeing a lot of those again when it comes to cybersecurity, and also when it comes to the software world. We're seeing some changes there in terms of like how business is going to be conducted. And I think also like those companies are starting to understand like we can't operate the same way right now since we have AI. You know, it has to be some change into our model, subscription, and all these different things. So I don't know what's going to happen in that sector, but overall, I agree with you. Like we are potentially seeing some rotation back into software. I mean, uh, the only thing is I don't know how long it's going to last. You know, how long we're going to see this before we start seeing the move back into the AI stock, into the chip stocks, and all those different things. So again, is this temporary or is it more like things are changing? I'm not sure. You know, so it's going to be very interesting to see what happens in the next few weeks. But overall, we are seeing some strength into the software sector. I mean,
Yeah. And I'll point out that the two names that we kind of have hammered over the last, man, this probably goes back to like January.
yep,
CrowdStrike hit an all-time high this week,
yep,
new all-time high. Palo Alto hit another new all-time high today.
yep.
So those two companies they've been the clear-cut winners in the cybersecurity space. There are some other names out there that I would have to do some more research on to see is there value based on where they're trading. Like Zscaler is trading at 149. It had a high back in November of about 336.
Mhm.
So that's a stock that's done fairly well over the last, I'd say, 10 to 20 days. But that last earnings report that they had is what kind of killed the stock.
Yep.
So a couple software names, I mean, a couple cybersecurity names out there. I still think that there are some that aren't trading at all-time highs. But what I would definitely do is start doing research around those names and finding out, do they still have potential? I think let me give you another one. Another one that's off its highs, Okta. Its
Okta
high
is a
was
good one.
I think its high was way back in 2021. Its high was 294. Yeah, just go look at the month Okta is having, right? It traded from like 102 to like one above 150. So it's trading around 150 right now. So that's another name I would definitely try and take a look at. So yeah, cybersecurity, there's some names in there. You just gotta, do the research and find out, okay, is this a company that I want to get behind
Right.
and invest in?
Yeah, and we give you guys some good names too. So I mean, just go and pull up the list and figure out which one you want to be involved in. But overall, I mean, we know that cybersecurity is needed, especially when it comes to the AI thing, AI build out and all this stuff. That's one of the sectors, one of the ecosystem we're talking about that it is really needed in this sector right now. But speaking of software, man, let's look at IBM, International Business Machine. That's what IBM stands for, in case you guys don't know that. I mean, Tuesday, that thing dropped 25%. I mean, it wiped out about, what is it? It wiped out like $67 billion in market capitalization in a single session. And it broke the infamous 23% single day record drop from Black Monday in 1987. I
Ooh.
mean, that's damn near almost 40 years ago. The stock closed near like 217 following the initial plunge and has continued to linger around, wrapping on Friday session at 212. So we, even today, we're still seeing some drop today. Now, what caused that drop? I mean, they pre-announced. I mean, I've never heard this. Like, I've never heard it. They pre-announced their their revenue coming up into like before they even reported earnings. They're like, hey, just to let y'all know, we're gonna fuck this one up. We're gonna mess it up, you know. They're gonna miss Wall Street estimates. So Wall Street estimated like 17.9 billion. IBM said it's gonna be about 17.2 billion. So I mean, that it's not a huge miss, but it's a big miss based on all this thing that's happening, right? So the company posted an adjusted earnings per share of $2.93, falling short of estimates $3.02. And while they always talked about this, Wall Street expects you to deliver every single time. You don't deliver, they're gonna punish your butt for it. And I think IBM got punished pretty hard for this. So let's talk a little bit about that, man. The other thing I will say also that CEO, he was pretty cool. Like he admitted, you know, he admitted the mistakes. He admitted that the expectation was a little too high, which kind of scares me also into a lot of those other companies. Like, is the expectation too high for some of those things? But let's talk a little bit about that, Wale, and let's dive into that one.
Yeah, so this was, let me see. Yeah, so they were supposed to report earnings on the 22nd, but they came out and said, you know what, we're going to get in front of this and just give you the bad news early.
Yeah.
Billy kind of gave you those numbers. To me, the revenue number is not a huge miss. This is just my opinion. The revenue
Yeah.
number is not a huge miss. But when you look at how the stock has traded over the last month or so, it's trading at a premium. So
Mhm.
if you're not gonna at least meet expectations and you're trading at a premium, you're going to get punished. That's just the
Gonna
name of the
get
game.
punished. Yep.
So they said that their customers were prioritizing buying things like memory, buying things like chips and hardware for their AI build out, and they diverted some of the revenue that they were using towards IBM away from them.
Mhm.
So that's one thing that hurt them. Now, IBM CEO also said something that we had said way back in January, that companies are prioritizing cybersecurity as part of their spend.
Yep.
We said this way back in January. You can go check the receipts, and we gave CrowdStrike and Palo Alto as clear cut winners in that space.
Facts.
And IBM CEO came out and said it. They said, despite spending more money on hardware, memory, chips, etc., they are not scaling back on cybersecurity. And if not, they're spending more money. And we saw that some of the cybersecurity companies ran up a lot that day. I think Palo Alto was up 7% that day. CrowdStrike was up over 11% that day. Now, when you analyze IBM as a business, execution has always been their issue in my book because, again, we talked about how IBM basically had the first gateway into AI with Watson. Like Watson was the first big sort of AI model that everybody kind of knew about, and
Yep.
the execution on that was just failed.
Yep.
IBM sits in a very critical space when it comes to quantum. And if you believe in quantum and you think IBM can be a winner in that space, we don't know when quantum is going to be wide scale yet. We know that they're still kind of building that out, but we know it's coming.
Right.
IBM is one of the bigger companies with a bigger balance sheet, bigger assets, that can build out the quantum business to scale. But based on their history, the question always is, will they execute?
Well, they execute. Yep.
That's the problem because I mean we don't didn't they, I think they sold the Watson business completely, right? They got rid of it.
Yep. They're done with
Yeah.
it. Yeah. I
Yeah.
don't
So
understand why, but yeah.
yeah, yeah. So they have to do something, to really get back into the game. And I think quantum is what can help them. Whether or not they can execute, I have my doubts based on their track record. So
Yeah. Yeah. I mean, listen, like I think this whole AI build out is going to impact a lot of people. You know,
yep.
and companies going to reprioritize where to spend their money. Even if they're laying off people, even if they're like saving money here, they have to reprioritize like where is that money gonna go? And a lot of it's not gonna go into like those companies like IBM and some of those, it's not gonna go toward that. They're gonna have to want to secure their ecosystem before they can go out and purchase more AI stuff. Because AI has moved so fast. Like in certain sectors, AI have moved really fast. People have adapted, companies have adopted AI very, very quickly. Now, the issue that this is introducing is the security part, right? So that's a big thing. Like if you work for a corporate company right now, you're probably doing a lot of training on AI. You're probably getting a lot of different, um, you know, work and work sessions on AI just to make sure that you understand how this thing works, and also make sure that you can protect your company from anything that can come with AI, because it can be a good, it can be a bad thing also. But overall, I think companies are realizing like, we can be excited about AI, but it's like we gotta start protecting ourselves too, because that introduces a whole slew of other issues. And here comes all the different companies that we talked about, the cybersecurity companies. But I think for IBM to come out and say what they said, for me, it kind of validate all the stuff that we've been talking about in terms of like security and all these different things.
Yeah. So the valuation of IBM, like I said, it's a lot more attractive, but to me, I'd probably wait and see what they say on that earnings call that's coming up next week to really get
Yeah.
an idea of what's really going on with the business, because slowing growth and slowing revenue, the first thing I'll say is that means that your business no longer deserves to trade at a premium. It just doesn't.
Yep.
So does IBM come back down to a more attractive price? Possibly, right? I would say that if you're looking at getting into IBM, you better have a long-term time horizon, because I don't think that this is going to be a quick fix. I'm not saying this is another Intel. I'm not saying that per se,
Right. Right.
but they've got problems that they have to sift through, and there's going to be some growing pains. And we'll see what they say on an earnings call. But this is a name that I would definitely be watching, not necessarily for the AI piece per se, but the quantum piece. I think is going to be important, and just hopefully, they don't drop the ball in that area, because they dropped it on AI, dropping it on quantum. That's not
Yeah.
going to be a good thing.
It's not
So
gonna be a good thing. Yeah. If they can get over that 221 level, I don't know. I'm not gonna keep an eye on them. They have to get over that 221 level for me to start thinking about getting in again, even after the earnings they report earnings. So we'll see what they say in that earnings, honestly. We'll see if it's a good thing, or maybe, they can ease some people's pain by reporting some data that maybe people didn't think about. But overall, I think this is gonna be a really, really interesting one, honestly.
yeah, they got a lot to figure out, and
Ooh, boy.
yeah, they got a lot to figure out, and hopefully, um, like I said, they don't lose that they don't lose any momentum. So,
Right,
and
right.
we've seen some legacy companies switch CEOs and make some drastic changes, like Adobe was one. So
Hmm.
um, I don't know if that might be something they might be thinking about now. So we'll have to wait and see.
Yep, yep. Let's move on to another software company, Netflix. I mean, I don't know if you consider Netflix a software company, but it's definitely in the media world. Netflix reported its Q2 2026 earnings on Thursday, July 16th. And boy, oh boy, the stock fell 7.26% sell off on Friday. I mean, we are down to 68 and 95 cents. I mean, I feel like Netflix hasn't really gotten a break since they split. It's just he has not really done anything. It is literally hovering around a fresh 52-week low. Like it is down there. You know what I mean? So the let's look at the numbers. The earning per share came in at 0.80%. I mean, it kind of beat the analyst by a penny. It's like because I did the analyst was 0.79. The revenue was 12.56 billion, marking a 13% year-over-year increase, but slightly undershooting the 12.59 billion Wall Street consensus. Again, not a huge miss, but they got punished for it. The net income rose from 3.4 billion while operating margins landed at a healthy 33.4%. And again, why did they miss? The same thing that Wale always talked about: guidance. Guidance poked the market a little bit, and that caused their stock to come down. So let's talk a little bit about Netflix, man, because I didn't expect him to. I actually expected him to report some good numbers and give some good guidance, given that they have been raising their prices, getting into a lot of different other movies, and kind of looking to like live streaming. And I think they're thinking about introducing like a 24-hour like show or 24-hour streaming service where you can just log in, kind of like a TV, where you can watch shows all the time. So again, they're trying, but they got punished. So let's talk a little bit about that.
Yeah, so we're looking at Netflix. If we talking about pre-split numbers, its high was 134 a share. We are sitting at 68.95 a share today, and we are down for the last 1, 2, 3, 4 months so far. Now, I will say this: Netflix has now touched the 50-month simple moving average and found support.
Mhm.
Is that a level that they can hold moving forward? That we'll just have to wait and see. Now, Netflix trades at a premium, or it was trading at a premium. And you're trading at a premium, you have to show premium numbers. So the
Yep.
revenue miss, they were going to get punished. So they got punished for that. Another thing that you had to listen to on the call is that their guidance going into the next quarter was very, very tepid.
Mhm.
It was not something that you want to be proud about as far as looking forward into the future. Growth is also slowing down.
Yep.
So growth is slowing down. Another thing that Netflix used to always report was subscriber growth.
Driver numbers. Yep.
They don't report that anymore. Another thing that they used to report on a twice a year basis was their what we watched, which was basically their engagement report that they were showing every semi-annually per year. They're saying starting next year, they're only going to publish it once a year. So
Mhm.
less transparency into the business. That's not always a good thing. So, what does that tell you about Netflix? We don't know if they're losing subscribers. It's possible that they could be losing subscribers. Netflix is a discretionary item to most households. It's not a need. And I have been a firm believer where I am not going to sit here and say that the consumer is strong. I'm not. I refuse to believe that narrative right now. And it could be that there could be more households cutting the cord when it comes to Netflix, because if we had months where gas was at a premium, groceries are at a premium, to me, Netflix is one of those household items that people are probably going to get rid of. So um, I think that they're being punished for that. We don't know if they've lost subscribers because they don't report that anymore, but the slowing growth and the tepid guidance going into the next quarter makes me a little bit shaky about what's going on in the business under the
Yep.
hood. And you know, I have not I have not been a fan of any B2C company in the last year, 2 years.
Yeah. 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 Yeah.
I have not, and I think this is another one that could continue to get punished. So if it can hold that 50-month moving average, which is basically $68 on the nose, maybe it recovers. But to me, it's going to be a very choppy ride.
Yeah. And I agree with you, man. The B2C, the business to consumers has been, I mean, if there's anything you want to cut in this period of time, especially with the economy the way it is, people are gonna you're gonna forego Netflix, or you're gonna ask your friend to give you to give you access to their Netflix, somebody who can afford. You know what I mean? So it's like, there's no like, it's a want, it's not a need. You know what I mean? So it's like,
No,
if it's a want, it's not a need. Even if it's like $20, people are like, that's a lot of money. Like, they will cut that Netflix to save some money to be able to pay for some other stuff. So streaming services right now, I think they are definitely on the chopping blocks when it comes to like people saving money and stuff. So whether you have good, you know, um, movies, shows, or whatever, it doesn't matter. When consumers need to cut something off, this is the first thing that's gonna go. That's gonna go. So
correct.
Yeah, I think they are not necessarily in trouble, but I feel like until this consumer economy can improve a little bit, I don't know how far Netflix is gonna go. They're gonna have to figure out a way to get into the B2B. I don't know how they're gonna do that. I don't know what direction you're gonna go with that. Maybe they need to start running more advertisement on their platform. I don't know. That maybe that's gonna be a way for them to get more money. So all these eyeballs that they have, start running ads, you know. So I don't know. We shall see how they do in the next few months and if the stock can recover. But let's move on to ASML and TSM numbers, man. That I was surprised about. Like the fact that did they both drop? I think they both dropped, right? Hold on. Yeah, they both dropped. Like that, I was surprised about that. Numbers wasn't looking bad. Nothing was looking bad. But again, I honestly think like kind of like what you say, when you trade at a premium, Wall Street expects you to report way like crazy numbers. If you don't report crazy numbers, they start reevaluating where you should be. And I think TSM and ASML kind of also um are getting some of that also. But apart from ASML, even TSM, if you look at some of the stock that ran up in the past few months, like they're all gonna get punished the same way, in my opinion. Like if you don't report stellar numbers, you are gonna get punished every single time. So let's talk about those two real quick and let's see what you think about those.
Yeah, so let me clear this real quick. All right, so I'm looking at ASML, which is a name that we talked about many moons
Way
ago,
right.
and gross margins and net income were phenomenal, right? They have a monopoly in that business. Um, Sales continue to rise. Guidance, another beat. Now, I don't know if Wall Street was expecting more. I don't know if it's one of those guilty by association because all AI stocks were down. Like, I don't know. I don't really know what caused the drop. ASML's numbers are showing that the spend for AI is not slowing down. That's one thing for sure, for sure, for sure, for sure. That if you go through that earnings report, it's not slowing down.
Right.
I'm looking at TSM. TSM's second quarter profits jumped 77% to a record high, and their gross margins were 67.7%.
Mhm.
And they guided for revenue for next quarter that reinforced it said management's view of a multi-year AI demand cycle is still intact. Now, TSM is still spending money on capital expenditures. I think that Arizona plant that they're still building out is not at full capacity just yet.
Not yet.
Also know that TSM buys a lot of their equipment from ASML. So these two companies, the way I see it is if you give me a crystal ball and ask me where these names will be trading in the next 2 or 3 years, I would say that they could be trading way, way higher if the demand for all of the chips and all of the things that are being used in the build out continue.
Right.
Now, one thing that I feel also hurt AI stocks this week is the fact that we heard some states, I think New York jumped on the bandwagon and said that they're putting a moratorium on building new data
Data
centers.
centers. Yep.
I think that that's one of the things that could be hurting AI stocks in general, because I think that's another, I think was Maine another state that jumped on that bandwagon first. And there's a couple more that were saying we're slowing down or pausing any sort of build outs for data centers.
Mhm.
So does that delay some of the revenue from some of these companies that they might have projected in their guidance because they were expecting some of these projects to be completed by a certain time frame? We don't know yet. Um, we know that one of the biggest reasons that some of these states are doing that is because of power and water. And they have not solved that problem. They're trying to avoid passing on higher power expenses to consumers. So until that problem gets solved, it would not surprise me if more data center projects get halted or get paused.
Yep.
So that's one of the things that you have to keep in the back of your mind when it comes to this whole AI build out, because, you know, companies are projecting, hey, this project is going to be completed then, this project is going to be completed then, and then states start getting in the way and saying, not so fast, then companies are going to have to curtail their projections and their revenue numbers for the future, which could potentially hurt the stock. But I will say I didn't see anything bad in any of these reports. And if these continue to show weakness, this might be a name that I have on my shopping list for sure.
Yeah, I mean, those are two big companies that like they are very important to this AI ecosystem. So I don't think they're gonna go anywhere anytime soon. It's just a better opportunity from it's high. And again, like hey, people need to take profit. People need to book in some lock in some profit. So even if it drops a little further than this, I still think TSM is very attractive. ASM also is very attractive because they just need it in this ecosystem right now.
They're irreplaceable. They're
Yeah.
irreplaceable. You cannot replace ASML because they have a monopoly in the technology that they have, and then you cannot replace TSMC because they are the chip provider to most of the biggest chip makers in the world. So,
Mhm.
I am a big fan of both those companies, and if they continue to drop, I will have my eye on them.
Absolutely. Let's move on to Apple, man. Apple has hit an all-time high. That was a silent giant that moved quietly over the past few months. Because remember, we were talking about Apple. Everybody was participating in this move except for Apple and Microsoft. I think those are the two companies. I was like, what's happening with those two? Like, nothing's really like, they're not really moving the same way everybody else is moving, But Apple finally hit an all-time high on Friday, a fresh all-time high, closing at a record 333 and 74 cents. I mean, that is a historical high. Just look at the valuation for Apple alone. It pushed their valuation to over $4.90 trillion. I mean, that's 4 trillion. Yeah, that's a lot of money. That's how much the valuation is. Like this is huge, you know what I mean? So again, for them to hit an all-time high, just being a solid mover like that, that's for me, that is amazing. They also got a lot of upgrades from different companies. I think the SSBC upgraded to buy to a price target of $366, which is crazy. Again, this is another company that haven't really necessarily announced how they're going to be participating in this whole AI build out. I mean, they're still talking about phones, y'all. They're still talking about phones. They haven't come up with a new technology just yet. But again, are they doing this on purpose? They have something in the background they're working on, or they're just trying to see where things are. Again, let's hear your opinion on this Apple move, man, because I think this has been a silent giant mover right here.
Yeah, so I've been pretty negative on Apple. I think that's been very clear. I said that they're no longer a growth company. Maybe somebody sent them the last couple episodes where I was
They probably did.
dissing a business, but I have not been a fan of Apple. And now, while everybody has been spending money on AI, selling bonds and issuing equity and raising money, Apple has been the one company that hasn't really been spending a lot of money. And I think maybe investors are rewarding Apple for that because they just kind of been chilling.
Mhm.
Um, Apple is now more valuable than Nvidia because Nvidia has had a very tough go over the last couple of days. So with that being said, we still don't know what Apple's AI strategy is. We
Right.
don't know.
Right.
We're still waiting to see what happens with their business. But it sounds like the market is rewarding them for their prudence in being very selective on what they're spending and how they're spending.
Mhm.
So, will this continue? We probably have to wait until their next earnings call, which is supposed to happen. Is it next week or the week after? Let me go back to that Apple chart. Apple's next earnings call is on the 30th. So we'll get some more insight in what's going on with Apple. Are people thinking that whatever issues they were having with growth in China, maybe that's been solved? I don't know. But yeah, I'm actually shocked that it got to an all-time high over the last couple of days. But it has had a really, really good July compared to some of the other stocks. Google got punished this week because they are delaying some of their rollouts for the Gemini platform. So they got punished really, really hard this week. I think the stock was down like what 4% yesterday, and I think it was down a little bit more today, 2% today. So yeah, maybe Apple's wait and see attitude is starting to pay off, but we'll really find out what's going on with the business on their next earnings call. So we'll see if they continue to deserve that premium number that they have right now.
Amazing though. I think they have done something that a lot of people probably didn't expect them is just sit on the sideline. It is hard to sit on the sideline when you see in all the other company stocks is moving like crazy, doubling in numbers, and you see all that, but they just have like this that steel heart, man. We're like, you know what? We're just gonna sit back and just watch. I don't know what they're waiting for. I don't know what they're looking for. But again, it looks like it's paying off. But let's talk about the lawsuit with OpenAI, man. OpenAI, I don't know what's going on with Sam, man. Sam is out here scamming. I don't know if Sam is doing it or the people that works for him is doing it, but man, oh man, he is emerging to be like the final boss. And I don't know when you play those video games, he's emerging to be that final boss, man. It's like he don't care about no companies. I mean, to conduct what they call a corporate espionage on hardware disruption. I mean, it's crazy. The allegation is the iPhone maker claims OpenAI orchestrated a coordinated campaign to systematically poach high-level hardware talent to illegally harvest Apple's intellectual property. The stolen secrets reportedly involve unreleased designs, testing protocols, and manufacturing process meant to jumpstart OpenAI's secretive consumer device ambition. Now, I did hear this before. OpenAI is trying to come up with their own device that you can use OpenAI on. I don't know if it's going to be a phone. I don't know if it's going to be a tablet. Nobody knows. But I don't know, man. How much money they got to pay you if you work for Apple? How much money they have to pay you to entice you to put your job on the line for OpenAI? Like they had promised you something like that has to be like offer you cannot refuse. Like that is insane to me that you will go to that level to try to like get something from a company. You know what I mean? So let's talk about that, man, because that's insane to me.
Yeah, so Apple and OpenAI were supposed to be partners and working together and all
Like
of this
seriously.
stuff. And now that relationship looks like it might be done. Um, this is the second time another big company, the CEO, has basically called Sam Altman not playing by the rules and,
Mhm.
doing stuff behind people's back. He won his case with Tesla. Now, I don't think that Sam Altman was specifically named in this specific lawsuit, but I'm pretty sure they're going to try to dig up stuff if there's been any communication with Sam and his involvement and stuff like that. But this is really, really nasty, and we don't know how long this is going to play out in court because this could be something that gets dragged along.
Yep.
And it says Apple says more than 400 former employees now work at OpenAI. So OpenAI had been poaching talent from them,
Yep.
and yeah, they said that they had been stealing. Because one of the things, if you ever work for a tech company and you work in like the research and development uh, division, you are sworn to secrecy. Like you can't say
Yep.
nothing about nothing,
Yep.
and you can't even tell your spouse. You can't tell
Mm-mm.
nobody. So the fact that that stuff might have been leaked out, might have been breach of employee contract and all that stuff. So we'll see how it plays out. But
Yeah.
whatever relationship that those two had, I think that thing is going down the garbage. So we'll see.
Yeah. 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 And it's to me it's just insane, man. Like even if you as a CEO claim to not know what's happening, like I don't know if I
It's
believe
hard.
that,
It's,
you
it's,
know?
it's hard. It's hard. Yeah, it's
Yeah,
hard.
yeah.
So we'll
I
we'll
mean,
see.
yeah. But this definitely gonna be interesting to see. I wonder how this is gonna impact their IPO. I think they pushed the IPO also to like 2029 or something like that. I think they pushed it further out, well, 2027, somewhere around there. So I don't think they're gonna do an IPO this year. So I mean, there's just so many things, man. And then he has his thing with the whole issue with Musk also going on. Musk is calling him like Sam Scam Man or something like that. It's yeah, there's a whole feud was happening online over the past couple of weeks. Like they were
Yeah,
going back and forth, back and forth, back
yeah.
and forth. For
He
those of
don't
you
have
who don't, yeah, for those of
he
you who
don't have
don't know, like Musk was one of the first people who gave OpenAI a lot of money because they started out as non for profit. They're like, we're gonna build this thing, it's gonna be for non for profit, and Musk liked that idea that you're not gonna profit from this, and it's gonna be this thing. Amazing, let's do it. But then Sam decided to open up a profit section of OpenAI, and yeah, that kind of threw the whole thing, a wrench in the whole thing. But yeah,
yeah,
overall, man, like I don't know.
yeah.
It's gonna be interesting to see how this thing goes.
He doesn't have the best reputation out there right now.
And to think about it, so Claude actually started with a bunch of people who left OpenAI because they didn't believe in the whole thing. And Claude is now like becoming even bigger than OpenAI, in my opinion, in terms of like the creativity and the level of technology they have. But something's going on with Sam. I don't know what's happening. His reputation is not good right now. And in
No,
this world of business, if your reputation is not good, nobody's going to do business with you. So,
nope.
but yeah, I think it's just interesting. Let's move on to speaking of Elon Musk, and let's talk about SpaceX, man. I feel like we talked about this before SpaceX IPOs. We said if you are if you're smart about this, do not invest in this until, I mean, we didn't say do not invest in it, but like you might want to consider. Think about it before you start throwing money in there. It's a good company, yes, but the numbers are just not, it's not adding up. You know what I mean? Then people are losing money, but they're valued as $1 trillion company. Like it makes no sense. And I think there's a lot of people who were screaming that from the top of the mountain, but now look at the stock. I mean, it dropped to, I think is this sitting at below the IPO price or at the IPO price?
No, it is. It is below the IPO
Below the
price.
IPO price. And I think it should go lower. I think it should go lower because until they report earnings, until we can see how things actually are under the hood, I don't think anybody should be buying this stock yet. Yes, yet. It has been built. It's been hyped like crazy, to just kind of like trying to pump it up, you know what I mean? But
This is
I
the
don't know,
face of
man.
this is the face of a man who has SpaceX puts.
Wale beat me to it, man. He got SpaceX puts, and if you guys see like in the numbers, we went from what to how far did it get?
That thing got to 225.64 and
Yep,
now it's trading at 122.12.
122.12.
Or that was a
That
low. That was a low. The low was
yeah,
122.12. It's trading at 123.99.
I mean 50% just from a couple of weeks ago. Not even a couple of weeks ago. Like it's crazy. It is crazy. I hope you guys didn't get in. Like I hope you waited. I hope you were patient. I really hope you were patient.
So the biggest thing that I said about SpaceX, and I made this clear, you can still like a business, but not like the price. And we have never seen a $2 trillion company that loses money.
Mm-mm.
There is no $2 trillion company out there that loses money on an annual basis. It doesn't exist. SpaceX was supposed to be valued at this super high valuation with nothing in their bottom line from a net profit standpoint. It's a big red flag. The stock opened, so the IPO price was 135. The stock opened at 150 on the first day of trading and shot all the way to 225.64 within a very, very short period of time. I think the first 3 days. And since then, it has been a pretty steady decline down. Now, another reason that I gave was you have private investors that have been holding this stock for a decade, like over 10 years. You want to tell me that they're not going to sell and cash out?
With a quickness.
I've been saying that these private equity firms have poured in tons of money into SpaceX over the last couple of years. They don't make money until they sell. So I'm not saying that they all have been exiting, but as more and more shares have become available to sell, people have been selling. Because if you look at it, One, two, three, four, five, six, seven, eight, nine, 10. SpaceX has been down 9 out of the last 10 days.
Mhm.
And we still have not seen most of the float available for sale yet. I think their earnings report is not coming until August. I think it's August 9th, if I'm not mistaken. And I would not be surprised if the selling continues to happen. Now, there was supposed to be a launch yesterday. They canceled it. I don't know the reason. I didn't hear about the details of why that happened, but they had to cancel that launch.
Yeah.
So, again, I'm not saying SpaceX is a bad company. I don't know. I mean, maybe in the next 5 to 10 years, maybe Elon Musk figures it out and delivers everything that he's promised on. But when it comes to investing, at some point, valuations will matter. And you cannot call yourself a $2 trillion company if you don't make money. Doesn't make any sense. Does not make any sense. Now, could SpaceX eventually grow into that valuation? Yes. But as things stand today, based on the numbers they reported pre IPO, they do not deserve that valuation. The market has spoken, and I rest my case.
Yep.
So,
And you can see by evidence by how the stock looks like.
yeah, like it has been a rough 10 days.
Yeah.
Um, and again, like I said, I think as more of that float becomes available, because you got employees too who, maybe they want to
Yeah,
buy a house.
they're ready to
Maybe they
cash
want
out.
maybe they want to pay off student debt. They ready to cash out. They've been sitting on
Yeah.
this, because they don't make any money until they sell either.
Yep.
So again, and as they continue to see the stock drop, they're probably like, shoot, I need to get out of this ASAP.
Yep.
So,
And I mean, you buying it, you become their liquidity, right? You're the one buying those stocks from them, so you become the
exactly.
liquidity. So they're
So
selling you those stocks. So again,
I feel I feel bad
it's.
for. Go ahead.
Go ahead. I was gonna say it's gonna be interesting to see where it actually start basing. You know what I mean? I feel like once
Hmm.
you get to a place where it's like you start seeing some basing, I think that's where a number of people are gonna be like, oh, okay, that's a good price to be. In my opinion, it's probably gonna be below 100. Honestly, this is not a this is not $100 stock just yet. Honestly, in my opinion, it
I
should be
think it
lower
go.
than this.
Yeah, I think it goes below 100 as well. And like I said, I feel bad for those people who got trapped around 200. I feel bad for the people that got trapped around 180, because there are definitely buyers at those
Yeah,
levels.
yeah,
Um,
yeah.
maybe they ate their losses and they're waiting for a reentry. But yeah, this IPO, the IPO price didn't make sense. The move to 225 didn't make sense. And I'm actually happy that when the options came out on the day that it hit over $200, I
Mhm.
was like, yeah, it's time to make a move on this stock. So,
Yep, yep, yep. Now, what would your advice be for people who bought it at like $200 price? Is it is
I
it
mean,
is it is it more time to like reevaluate or I mean
so hopefully you didn't lose your shirt because you can always average
average
down
down?
if you
Yep.
bought the stock. But what what I would probably say is, I mean, if you bought it at 200, you're gonna love it at 122.
But we know that's not for a lot of people. That's like they don't people don't think like that though. That's the
That's
thing.
true. That's true.
You know what
See,
I mean?
the thing with me is that if you bought the stock in the 200s or in the 180s, you did not do enough due diligence behind the business because the fundamentals just don't justify that price.
It doesn't add up. No.
You probably bought it because you were overhyped, you wanted to get in, and your rationale for buying it at that level had nothing to do with research. It had nothing to
Yeah,
do with research.
absolutely.
Now, and I'm not saying don't buy SpaceX. It's you don't have to pay that price for SpaceX.
Mhm.
That's the key. It's not whether you bought it or you didn't buy it. It's what price are you willing to pay. Part of investing is buying good companies at good prices. That's part of the game. Getting good companies at exponential value. I mean at discounted values, not overpaying. So again, it's just one of those things where I can't. No person could sit down, do the research on SpaceX, and say this stock is worth $180, or it's undervalued at $180, or it's undervalued at $200. Like it just doesn't make sense. Now,
Mm-mm.
if you're willing to hold for the next 10 years and you're like, I'm not going to sell, I just want to accumulate shares, then maybe you hold for the next 10 years. But I don't know. If you bought it at that price, I think your best bet is to average down, because you're buying. If you believe in, I'm assuming you bought it at that level because you believe in the long term 5 to
Yep.
10 year story. That's what I'm
Yep.
assuming. So, and if that's the case, I hope you've been buying on the way down and lowering your cost basis, because otherwise you got a long way to climb back up.
I mean, I
So
agree with you. Like SpaceX, I mean, if you believe, again, when you buy a company, like you need to believe not only in the company, but you also need to believe in the CEO. If you believe in Elon Musk and you feel like he can turn the company around and, you know, and make sure that it's profitable and all that stuff, then yeah, I mean that's what you have to do. But again, like don't lose your shirt, like what is that investing in this too early. But you guys seen how long it took Tesla to go from below hundreds to all the way to where it is right now, even before the
correct.
split, even before the
Yep.
split. You know what I mean? People waited for years to cash out of Tesla. Like I'm talking about years, you know?
Yeah.
So it's I'm not saying SpaceX is gonna take the same amount. It might not take the same amount, it might be shorter, it might be longer. I don't know. But you need to believe in the company, but you also have to do research. You gotta understand the numbers, and you gotta believe in the CEO and the moat behind the company. I mean,
Yeah.
they talk about a like great, crazy things that ton to do. You know what I mean? If all of those things really become a reality, I think SpaceX is going to be one of the most valuable company on earth. But
Correct.
if they falter on any of those things, I don't know.
And my thing is this: Elon Musk genius is well documented. There is no question that the man's intelligence and ambition for what he wants to do. I'm not saying that he cannot execute on those things. I'm not doubting that. I am doubting what the company is worth based on today's revenue and EPS numbers. Actually, there is no EPS because they don't make any money. So that's what I'm looking at. Are you worth what you say you are worth today? And the answer to that is an emphatic heck no, not at all. Now, we'll have to wait until their earnings call, see what they say,
Yep.
and see what insiders do, because after their earnings call, insiders can dump more stock.
Yep.
And again, these are people that have been waiting for the last 10 years to cash out. So if you're a SpaceX investor or you believe in the company, my advice to you is, you know, to me, I think you can get this stock at a cheaper price in
Cheaper
the next
price.
couple
Yeah.
months. You know,
Yeah.
and if you want to keep buying on the way down, be my guest. But just know that it is going to be a bumpy, bumpy, bumpy ride.
Yep.
And if you're a Raymond James and you have an $800 price target, whoo,
Boy, oh boy.
I hope you're creating a letter to your investors to talk about what's happening with the stock,
What's happening with
because
the stock? Yeah.
that's a crazy, crazy price target based on what they have done. And
Yep.
that rocket launch that did not happen yesterday, it's not a good thing.
It's not a good thing. It is not a good thing. Or you can be like Kathy Wood. Kathy's been buying the dip.
Yeah.
That's Kathy's has been, it looks like she's reportedly buying all the dips in massive amount too. So
Wow.
again,
So Kathy Wood buying SpaceX is my uh
signal to
it's my signal to be bearish.
Kathy's a new what is that guy? What is the guy that we all short? Dang it. I keep forgetting. I can see his face now.
What, you talking about Kramer?
Kramer. Kathy's a new Kramer.
And it's crazy. They said that before IBM dropped 25%, Kramer was like, yeah, buy IBM. Ooh.
I'm telling you, I don't know what's going on with Kramer. Like, I legitimately do not know what's going on with Kramer. 99% of the time when he said buy the stock, that stock is dropping within the day or 2 weeks later. It's just I don't understand. I don't understand what's going on with that guy. Does he like miss the boat? Did somebody give him the wrong numbers? Or
I have no idea.
I
But
don't know who listens to him at this point.
he has an investment club that people pay a subscription for.
Oh,
He has an investment club,
is
and I'm sure that there are thousands and thousands of people in that group.
I hope he make
And
more money to this on this for these people than he loses for them because that's wild to me.
it's funny because they had a whole like I think they talked about I guess his show has been around for 20 years, and they had a whole segment about him like they were like hyping him up like this guy has done this, he's done that, he's done this, he's done that, and I just don't see it, man. Because his bad calls. Now, I will give him this. He was one of the investors that believed in Nvidia way before Nvidia blew up. I will say that. But if you go back and go listen to some of his calls, like with Lehman Brothers before they went bankrupt, he was like, "Nothing's wrong with Lehman Brothers." Next thing you know, Lehman Brothers was
No,
down and out.
yeah.
So I don't know, man. I
I think
think
my man is just an entertainer, honestly.
he's an
He's a
entertainer,
yeah.
and that just to me, it's just a signal that marketing really matters, right?
Yep. 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 You can be the worst of them out here, but if you market it right, people will believe everything you sell.
Exactly. I want to say my track record probably better than Kramer. Shoot.
Oh, hell yeah. Oh,
I'm like, I'll stand on that.
no doubt. Like I don't know, man. I feel like every time Kramer says something, it's like if you just 99% of the time, if you go the opposite,
Like,
I promise you, you'll be
I
okay.
mean, he's so bad that some companies have an inverse Kramer ETF.
Yes. Yes.
Like
It's a real thing.
when you have an ETF that is designed to go against your like plays, that's not a good thing, my friend. So that's kind of crazy to me because I think Autopilot is a company that has an investment fund that is called the Inverse Kramer, and if I'm not mistaken, it has done pretty good so far
Really
this
well.
year.
Yep,
So
really, really well. So again, that's just Kramer for y'all. I mean, just keep an eye on that guy, man. I don't know what he's doing in his life, but he's making a lot of money. Oh, he's making a lot of money.
oh
Let's
yeah.
move on to PayPal, man. PayPal received a massive $53.4 billion joint takeover over for payments rival Stripe. Stripe wants to take over PayPal. Is that a good thing? Is that a bad thing? I mean, I don't know. Are they gonna get approved for that takeover? I'm not sure. But that helps sent PayPal shares, I think it was up like 23% this week to almost 55 and 50 cents. I mean, just because somebody's going to buy them. So the proposal is structured 50-50%, 50-50 joint venture where Stripe and Advent will take PayPal private, holding equal ownership stakes rather than breaking up the company. I mean, I don't know, man. To see PayPal go back in, private is going to be very interesting because also though they're like one of the biggest companies out there for payment processing and all this stuff. But what do you think about that?
Yeah, so PayPal is a company that if you look at the chart long term, like let's just go back and pull up PayPal. They have fallen on hard times. Uh, Let me pull up the ticker right now. Yeah, we're looking at a stock that traded. Man, actually, let me pull back even further. Let's go to the last. Yeah, we're talking about a stock that in 2021 traded at $310. The stock is now trading at $56. I mean,
Wild.
that's wild. So they are a struggling business. And one of the reasons why is because if you look at what has happened in the payment space, Apple Pay, Google Pay, Venmo, does PayPal own Cash App?
No,
Or
who owns Cash App? I think Facebook owns Cash App, right? No.
I don't think Facebook owns
Who
Cash
owns
App.
Cash App? I don't think it's PayPal. Hold on, let me see. Who owns Cash App? Square.
Square.
Block.
Okay.
Block.
Block,
Yes.
block. Okay. So all of these payment processing entities have entered the marketplace, and PayPal has pretty much just gone down
Yep.
since then.
Yep. Yep.
And then you got Stripe. so so as someone who's used both for payment processing, I prefer Stripe. I have PayPal, but I
Mhm.
don't use it as much. But I don't. Will it get approved? I don't know because they're saying that if it does get approved, the combined company Stripe and PayPal will process annually $3.7 trillion in payment volume. So it will be one of
Hmm.
the largest online payment companies globally.
Yeah, somebody's gonna dispute that for sure. Somebody's gonna.
So we'll see what happens. We'll see if it gets approved. Um, I called PayPal in a short squeeze not too long ago. I did not stay in because I got chopped up and I missed out. So when I saw the stock jump the other day, I was very angry because I missed out on a big move. Because again, my execution was not the best. Don't get me started on that right
Exactly.
now.
You said, don't get me started.
Don't get me started on that right now. Oh man, I missed this one. I missed this one big time. But we'll see what happens. I think it's good for shareholders. I think it's a good offer for shareholders, so they can get out of this business. But they got an earnings call coming up too. That is coming up on 7/28. So we'll see what happens. But yeah, PayPal is on the sale on the
Yep.
chopping block. Yeah.
Yep. 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 But again, like I mean, if PayPal disappear from the list of payments, it's one of those legacy payments that we use for years. You know what I mean? So um, if it's gonna no, because it's one of those. Did I lose you?
No, you're still here. I can hear you. I can't hear you now. Your mic went off. No sound.
All right, is this better?
Okay, got you.
Yeah. So it's like for them to lose like all of that, for the market, for the payment system market to lose something as huge as PayPal, I think it's gonna create a ripple across. But again, I am sure somebody's gonna fight this. Like I don't think they're gonna just let Stripe take over all of that business. I don't know. I don't think it's gonna go by well. So they might face a lot of lawsuit or a lot of roadblocks to kind of buy this. So
Yeah, yeah, we'll see. But yeah, that's a pretty premium offer for PayPal. So
a lot of money. It's a lot of
um,
money.
and technically, the stock is still sitting under the acquisition price because the acquisition price is what 60.50 per share.
Mm-hmm.
So I'm pretty sure that some
That's
people
what they're doing.
they probably might be loading up on the stock to get what I call arbitrage, where it's like, okay, well, when it gets bought out, it's going to get bought out at 60.50, but
Mm.
that's if it
If it goes,
closes,
it goes through. Yeah,
if it
if it
goes
goes through.
through. So you're
Yep.
betting on it going through. So
Yep.
yeah,
Yep.
we'll see. I'm on your side where there might be some hurdles getting this thing through the door. So we'll see.
Oh, absolutely. Well, let's look at next week economic calendar. There is it's gonna be a lot of data actually. So we have Monday, July 20th, the U.S. leading economic indicators AEI for June is coming out. We have Thursday, the initial jobless claim, July 23rd. Friday, July 24th, we have the flash U.S. manufacturing and service PMI, and then we have the new home sales on Friday, July 24th also. Um, some of the numbers that we're expecting the week after, I mean, we have FOMC, July 29th. That's something that's very important for you guys to keep an eye on. And then finally, Fed Chair Warsh press conference is actually going to happen on July 29th at 2:30 p.m. I hope he says something crazy or something good, but it's like I don't know. I think we're still kind of in the same position from where like last month or so. We also have the PCE coming up in July 30th at 8:30 a.m. also. So that's something else to keep an eye on. And then advanced Q2 GDP estimate is also coming on July 30th, on Thursday, 8:30 a.m. So quite a few big numbers, but I think all eyes are honestly going to be on that FOMC interest rate decision policy to see where we are going to be rating all this stuff. I mean, we are approaching August now. It's going to be time for them to decide if we're going to get a rate increase or not for this year. I mean, we are closing in on the third quarter here. So again, keeping an eye on those numbers, man. Anything specific you watching for beside those?
Specifically, I think FOMC on the 28th is big. PCE on the 30th is big. We're gonna start getting a lot of earnings numbers from hyperscalers.
Yep.
So that's also going to be something that we need to talk about. I forgot to talk about some of these financial companies like Goldman Sachs posted some really
Good numbers.
big numbers.
Yep.
BlackRock has $15 trillion in assets under management, which is insane. So they're the biggest asset manager in the freaking world, which is crazy.
That's
And
crazy.
yeah, lastly,
Yeah.
I'll say this. The US debt just hit a new high of 39.8 trillion. I'm saying this right now. There is going to be a credit downgrade of US debt coming soon from
It's
S&P
coming.
and Fitch. I think it's coming. I don't know
It's
when it's
coming.
gonna happen, but I think it's coming.
Yeah.
Um, yeah, all of that hype about, Doge and cutting the budget. Oh man, what a slap in the face.
A huge, because you don't hear anything about it right now. Where we are with we actually adding more money at a faster pace than any other time.
They are
So it's
just
like
they are kicking the debt can down the road.
it's not slowing down.
$39.5 trillion in debt.
It's not slowing down.
So to me, that's just another to me, it's another ticking time bomb behind this whole economy.
Yep.
It's another ticking time bomb.
Yep.
We don't know when it's going to blow up. We don't know when it's going to matter. But I'm just looking at this chart from 2000 to today. I mean, back in 2000, the national debt was under 8 trillion. Back in 2008, after the financial crisis, it was under 12 trillion. We're sitting at 39.5 trillion. When it will matter, I don't know. But to me, it's a ticking time bomb. It's a ticking time bomb.
Crazy.
And it sounds like the folks in no one cares.
They don't give a crap. They
No
don't.
one cares.
Nope.
So
Nope.
if you're somebody with a lot of debt or a bad credit score, don't feel bad.
Yeah. The government has more debt than you. So and you pay your taxes. And you still
30,
pay your taxes.
I think we'll hit 40 before we might hit 42 or 43 before the end of the year.
At the rate we're going, yeah, I don't doubt it.
Yeah,
I don't
crazy.
doubt it.
So I will leave on that note.
All right, y'all. Well, yeah, I heard it. We are in debt and it is getting ugly out there. It is really getting ugly out there. But again, we have shared a lot of information today. Next week, actually going to be a lot. Is it next week? When is IBM and all this reporting? So on actually Wednesday, July 22nd, we have Google reporting, Tesla, IBM, AT&T, and then Thursday we have Intel, Honeywell, Blackstone, American Airlines, and
Yeah, the
then
big
Friday
boys.
we have American Express, Verizon, and let me see who's reporting on Monday. Monday we have Domino's. If you like Domino's Pizza, they're gonna report. Steel Dynamics, Berkeley. July 21st, we have General Electric GEV. That's a good one to keep an eye on. GM, Lockheed Martin, Charles Schwab, Texas Instruments. I mean, we have some good numbers coming up in the next week or so. So that's gonna be good numbers to keep an eye on.
Yeah, we're going into the heart of earnings season. So
Yep. Well, and that's a wrap for this week, y'all. From all those information that we share with you guys, please, if you guys have anybody that you feel like will benefit from this information, please share, subscribe, and let them know that we are here to help you guys out. With that being said, yeah, have a great weekend, have a good night, and please be safe out there this weekend.